World War III has started here?
I don't. I think Putin may be a little smarter than Mr. Ackman believes. I think that Putin was. I think that he probably believes that his hand was forced in the circumstance. And I think that he has been surprised by the lack of conventional capabilities enjoyed by the Russian forces. And I think, too, that Mr. Putin, as a politician, didn't understand enough about the Russian economy to understand the real pain and the fact that he will, sooner rather than later, be unable to afford this war. I'm reminded of lesser combatants, which is to say Eritrea and Ethiopia, which don't like to admit it, but their war 15 or 20 years ago ended up because neither side could pay the gasoline bill. They literally ran out of fuel. And I suspect that the exiling of Russia as an example from the SWIFT system and the inability to do what they do well, which is sell raw materials to the developed world, means that the economic dislocation that he faces, including his ability to wage World War III, are much more constrained than maybe Mr. Ackman believes.
All right, well, let's focus on how Russia can potentially pay for this war. And there is some speculation that Russia may sell off its gold reserves to fund this military campaign, $132 billion worth of gold reserves. That, of course, would have an adverse impact on the price of gold, which has enjoyed a rally up until today. What are your thoughts there?
Well, given that I'd like to buy some more gold from a personal point of view, I hope that comes to pass. He will have to do it carefully, meaning he has to turn the gold into things that he can use. There isn't enough trade on a global basis in renminbi, as an example, that he could convert the gold into renminbi and then the renminbi into stuff he needs. The fact that he is frozen out of US dollar denominated trade on a global basis and frozen out of the SWIFT system is turning out to be a much greater detriment than he had thought. But it might be that the only fungible asset he has for sale is gold. Irrespective of the difficulty, that is the only thing that he can pay his bills with, in which case I would suspect that whether he wants to or not, he would have to sell it.
Except not if U.S. Congress has its way. Because of concerns that Russia is going to sell off some of its gold to fund its war, we actually have a bipartisan group of U.S. senators, very rare in this political environment that we have Democrats and Republicans agreeing on something, but they've reportedly proposed a bill targeting Russia's gold. They're trying to put forward legislation that's going to apply restrictions on any American entities, at least, making gold transactions with Russia's central bank holdings. They want to include gold sanctions in this big spending package that's expected to pass as soon as this Friday. So if that is passed, then Russia can't sell off gold, at least to the U.S. What does this mean for the gold price, considering everything else that we're seeing in the environment?
Two things to consider. One, most of the world is getting sick of U.S. extraterritoriality. It's important to remember when we regard Russia as an aggressor that almost half the defense budget of the entire globe is the United States. That'll get us a lot of hate mail, Michelle, but it's true. And increasingly, countries are understanding that they have interests separate and apart from the United States. Germany, Japan, India, and China have all said that they have to view the current circumstance from a pragmatic point of view that takes their own interest into account. The second thing is that gold is fungible. If Putin were to begin to sell his gold onto the world market at, say, a $20 or $25 discount, the idea that, as an example, Indian people would sell Indian gold to the United States and then replace it with Russian gold, $25 cheaper, probably serves the interests of all at hand. I don't think that the United States Congress has the ability to constrain liquid global trade in a commodity that is as liquid and as fungible as gold. In other words, I think they can say a bunch of stuff. I don't think they can do much.
Look, it's a good point. India has certainly not been as cooperative with this economic reaction to Russia as the U.S. would like. Certainly, China's not playing along. But let's bring it back to gold and your outlook for gold in the next 6 months, because we have seen, as I said, gold hit new intraday highs, at least in the futures market. But we've also got this dynamic with a very strong US dollar. So what are you seeing for gold in the next 6 months, Rick?
$64 billion question. Three comments there. The first is that 3 times before in my career, I've seen gold strong in conjunction with a strong US dollar. And that has been the condition precedent for a very, very, very strong gold market. You'll notice that gold is doing spectacularly well in other currencies other than the US dollar, given very strong US dollar strength. And the fact that gold is doing well in US dollar terms suggests that we are in the early stages of a real rebound in gold. In my experience, too, geopolitical concerns can move gold in the near term, but those gains are given up. What has moved gold in my lifetime has been investors and savers' concern about the purchasing power of conventionally denominated instruments. One thing that you can say about $130 oil and a war economy is that it will be paid for by quantitative easing. It will be paid for by debt and deficits. It will be paid for with negative real interest rates. Those 3 things, quantitative easing, Michelle, if you did that, it would be called counterfeiting, increased debt and deficits, and continued negative real interest rates, are a very potent 1, 2, 3 combination to make people concerned about the purchasing power of their savings in other instruments. And that's tailor-made for gold. So I think the current circumstance is good for the gold price in the intermediate term, perhaps not the near term, because the way we pay for this economic difficulty will, in every sense, in every way, be good for gold.
All right, so define 2 terms for me here. Good for gold and intermediate. That means give me a price and a timeline.
I suspect that gold will be up marginally to flat for 3 to 4 months. I think some Russian gold will find its way in the market because I think the Russians' need for cash is bigger than many people think. I think, too, personally, that a way will be found out of this hostile stalemate in the Ukraine. At least I hope so. I think so, and I hope so. But my upside target as we begin to pay on a global basis for what we're doing right now, I don't have a number for you, but when people tell me, Rick, are you thinking about 2,200 or 2,500? No, I'm thinking that the digit to the left doesn't have a 2 in front of it. I think it has a bigger number in front of it. I've been through, Michelle, 2 prior real gold bull markets in my life. And people normally underestimate the dimension of a move in the gold price. My first gold bull market, the price went from $35 to what, $850? My second one, it went from $250 to $1,900. I'm not saying that gold is going to go up 7-fold from here, but I don't think a double or a triple over the 5-year time frame is out of line at all.
So you do think that it's quite likely that gold doubles or triples within the next 5 years?
I do.
Gold doubling or tripling within the next 5 years?
Or let's put it differently. Let's say that the purchasing power of the US dollar denominated in gold falls by half. That might be easier for people to stomach.